to today's episode of The Daily Blend. I'm your host, AC, and we are joined in studio today by Alex LaBrunerie, investment advisor for LaBrunerie Financial. Hi, Alex. How are you?
Hi, good morning, AC. I'm very wonderful. Thank you.
Good to see you again.
Same here.
So, okay, let's talk a little bit about interest rates.
Interest rates, yes. So
what is happening?
We are halfway through the year, and the Fed the Fed has not cut interest rates yet, even though last winter, Wall Street and a lot of people across the country thought there would be an interest rate cut by now.
Yes.
Unfortunately, inflation is still not quite where the Federal Reserve Chairman Jerome Powell wants it to be, needs it to be. So before he decides to cut rates, so he's put the brakes on cutting rates until maybe late summer. So that's important because it's affecting Americans on how much they pay for buying a house, buying a car, credit cards, then on up through corporate America on whether or not they refinance their loans, commercial developers, just interest rates just trickle through the whole or ripple through the entire American economy.
Yes.
So we that has bearings on what the rest of the year looks like. There is a cycle in investments, though, AC, called the presidential election cycle.
Yes.
And oftentimes, since the end of World War II, elections for the presidency are good years for investors.
Okay.
There's notable exceptions. However, generally that trend is in place. And part of that, I think any sort of incumbent in the White House wants to run for re-election with falling interest rates.
Yes.
So I think it's not summer yet, even though it feels like the year's going by real quick.
It is.
There's still time for rates to be cut, even in September. But it's important. There's an old adage on Wall Street, which is it's sell in May and go away. We're here in May, and we're looking out on it at summer, and we're not sure, what's going to happen in the economy, let alone the world.
Yeah.
So hopefully interest rates get cut.
That's for sure. Because it really does affect, everyday decisions that you make.
It does.
And I don't know that in my younger days, if I thought about it, in that big kind of macro. Yeah. But at this point in my life, you think about it, it's like, okay, well, we've got a car lease that's coming up. Do we purchase the car? Where interest rates are 7.5% on a car loan.
Exactly.
And so it really makes you think a little bit harder about the decisions that you make because those interest rates are up there.
And that's across the board on every financial decision that requires borrowing.
Yes.
On the other side of the coin, for savers, people in banks, whether, listeners out there ought to check their money markets because now you can get upwards anywhere from 3 to 5% at high yield insured money markets at banks, brokerage firms. Yeah. So that's the flip side. That's
the flip side of it.
Yeah.
Okay. So. I should start thinking about it that way then. You tend to think about the things that are right in front of you that you see every day. I think about the housing market right now with interest rates being so high. And you look back and you think, gosh, 3 years ago, 4 years ago, there was, 2 and 3% mortgage loans.
Making predictions about the future is tough.
Yeah.
As Yogi Berra said. But it's hard to see that we'll go back to those 2.5 mortgages.
Yeah.
So
it seems like a long way away.
Long way away. 7% mortgages, I think.
Yeah. It seems like a really long way away. Yeah. And another thing that, I like to pull on my personal experience, and we talked a little bit about this before we came on the air. We've got lots of kids graduating right now.
It's what a great time of year.
It
Prom
is. Yes.
season, graduation. What a journey it is to get a child through graduation, either high school
or college
or somewhere in between. Get them independent and on their own.
Yeah. Those 529 plans.
Off the payroll.
Oh, well, kind of off the payroll. Sort of.
Yeah. But the 529 account, it's time maybe for parents and grandparents and other relatives to think if they want to add to a college account, 529, because in Missouri we do get our state tax deduction, and 529 money can be used for any qualified education, even parochial school payments now, but mostly for college or tech school, any sort of school. So little starting with anything, grows tax-free if it's used for qualified educational expense.
Yes.
Most accounts is how we often know the Missouri state tuition plan. You can go to any college. It doesn't have to be a Missouri school.
Right.
It's wide open, and you can check it out online, or if you have an investment advisor, consult with him or her. But really worthwhile to save and build for that.
It really is. And it's never too early to start saving. I think for my daughter, who's a senior now, we started when she was in elementary school.
Yes.
And for our youngest two, we've started, even earlier for them. And I'll tell you, it is really nice when you look at that account when they're seniors in high school. You say, oh, look, there's money there. Because the money goes out. We don't even see it. Yeah. It just goes straight out. We have that automatic
build it
deduction.
into the budget.
Yeah. So it just goes out. And so then you look up, and when they're in the 12th grade, and you're like, okay, we did well. Like, we did pretty good.
Yeah.
And I will tell you another thing. Yeah. When I sent out her graduation announcements, I put the little code on the back for anybody who wanted to go online and add to her account.
That's a great idea.
I mean, there are people who won't come to the graduation, but
they'll get instead of $50, $100.
Yeah, absolutely.
Yes.
So spread that word around for all your family and friends, because it doesn't have to be just you.
That's right.
That puts the money in.
That's right. And what a great use of money instead of one more
thing or whatever.
Starbucks.
Yeah, exactly. There'll be plenty of time for Starbucks and all that when they're on campus. But
that's right.
We got to get you on campus and get that housing and books and tuition paid for first.
Exactly.
So Alex, again, thank you for joining me. It's always nice to chat with you.
Has a wonderful beginning of the summer.
Absolutely. I know. And we'll see you again in summer.
Yes.
And you can tell us some more great things about the financial world and what's happening.
I will. I'll look forward to that, AC.
Thank you, Alex.
Okay. Thank you.